Hi everyone, thanks for joining us for this month's update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. It was almost a foregone conclusion that cattle prices across all types and classes would be higher in 2023, so it was a bit disappointing that January started out with some weakness in the futures and some of our other markets, but Rome wasn't built in a day, and these prices are above year-ago levels. Today, one of the big topics we're going to cover is the cattle inventory report that came out at the end of January. That has a lot to say about the future direction of the industry. We'll also talk about many of our other cattle markets, including the feeders, the futures, fed cattle, bulls, females, and we'll even wrap up talking about drought conditions as well. Of course, as we get into these markets, we always want to thank our sponsors first, Ag Risk Advisors. We appreciate them joining us. Now's an important time to be thinking about livestock risk protection. We usually see that feeder market hit its highs in the spring, and there's an opportunity to put a price floor on feeder cattle with LRP and leave the top side open. You can find more information at agriskadvisors.com. Well, cattle futures definitely trended higher closing out 2022, but as we mentioned, January saw some weakness, some of that from grain prices pushing higher, also weakness in box beef and cash cattle a little softer, but for the live cattle, they did find strength at the end of the month, actually hitting new contract highs, most of the contracts up $1 to $2, and you look at those December live cattle at $166, that's an $8 premium between here and the end of the year. In the feeder cattle, they didn't see the firm push higher that the live cattle did. Actually, we saw more weakness there. That March feeder contract below 180 at one point. It was the lowest point it'd been since November, but like the live cattle, they found some strength to close out the month. And if you really want to get excited about what the feeder cattle are doing, look at those deferred futures. That August contract $4 higher in the last month at 206, and the fall contracts above 210. So definitely some optimism about where these cattle markets can go. I kind of touched on cash cattle there, steady to a little softer over the last month, still performing well, just unable to grab any strength as packers have used the opportunity of lower box beef to bid prices a little bit lower, but there may not be too many opportunities to do so in 2023 as these cattle supplies continue to tighten. That, of course, takes us to our big topic for this month's report, the cattle inventory report. We're always watching it very closely. Just tells us a lot about where this industry is going to go, and boy, there were some surprises there. Total inventory across all classes down 3% from last year's levels. That wasn't a huge surprise. Where I was really surprised in those numbers was the beef cow numbers down 4% from a year ago and the lowest level we've seen on record for that report. And boy, you can look at these numbers across our western states, almost all of them coming in under year-ago levels. Now, we could certainly debate the accuracy of the state-by-state data. I know I look at some of those numbers and I feel like we've liquidated more cows than that, especially over the last 2 years here. But the trend is very clear. We are at the lowest cow numbers that we've seen in some time here, and tighter supplies should help to push prices higher. Truthfully, I didn't think we'd surpass those 2014 levels this year. I thought it was going to take us another year to do it, but with prices or if inventory's under 2014's levels, prices should be above. So hopefully we'll be able to achieve that. Another factor that tells us that this herd is not done shrinking are the replacement heifer numbers. 6% below year-ago levels, 300,000 less replacement heifers than we saw a year ago, and USDA actually adjusted last year's replacement heifer numbers lower, so those are going to be really tight, and what that tells us is it's just going to take longer to rebuild this herd. So for cattle producers, that is a pretty bullish report. The long-term trajectory tells us that we probably won't bottom out on inventory for at least another year. I'd say it's probably more likely to be 2 years until we reach the bottom. We've been saying it for a while now, but tight supplies, strong demand, and increased packing capacity should equal better leverage and improved prices for producers, hopefully improve profitability as well. What we really need now is for Mother Nature to cooperate and bring us some improved weather. You can see the map there. I've got two side-by-side comparisons of the drought monitor. That's the most recent one, and then where we were at the same time a year ago. Hard to say it's better. Some areas certainly look better up through Arizona, New Mexico, Colorado, into central Wyoming. that looks better. Montana not as deep of red, but certainly could use some moisture. As you get over to the high and southern plains there, Nebraska, Kansas, Oklahoma, Texas, all looking tougher than it did a year ago, and that is something that we are desperately hoping to change here. You can look at the drought forecast from the National Oceanic Atmospheric Administration. They're saying over the next month, not a lot of change to be expected. Drought holding on, but some of the long-term forecasts say this winter and early spring is our best chance for moisture. We're really hoping to get it. One of the effects that long-term drought has had on us is the hay supplies and hay production, the lowest in over 60 years, and it's going to take a while to rebuild those stocks. That's one of the factors that's really driven our costs higher, is these feed costs, not just hay, corn too, and then we've got fuel costs, higher interest. It's put a lot of ranches in a pinch. We've got higher prices coming in, but with expenses where they are, many operations still struggling to break even. Hopefully, we're going to turn that tide here in 2023. As we look at some of our other cattle markets, of course, we want to touch on the feeder cattle. They came in sharply higher. The feeder futures may have been a bit disappointing, but boy, at that Northern Livestock Video diamond ring sale, those prices look very strong. Some of those 5-weight steers, lighter test, but topping out at $253 on the value-added kind. 6-weight steers, $205 to $220. You know, most of those lighter steers, they were $20, $30 ahead of where they were a year ago, or the heavier feeders, more like 10 to 15 better. Similar story for the prices there at the sale in Torrington, and we're seeing that spread on the heifers coming down quite a bit, so that is supportive to see that as well. Of course, we want to touch on the cattle on feed report. Not a lot of surprises there here for January. Total inventory down 3% from last year. We're expecting that to be lower for the rest of the year, really. And as you look at that placements figure, that has had a steep drop. Would expect that to continue. That was down 8% from year ago levels. And of course, that report did factor in December, where we saw some of those bitter cold temperatures, which really did slow down cattle movements, and we'll be reflecting some of those changes in the January report when that comes out in February. As we turn to look at the cow market, start out with the bred cattle here. I'd call them $100 to $300 ahead of year-ago levels, just depending on the sale. Really, with where those feeder prices are, you'd expect them to be higher, but just the challenges we have with not enough forage and feed available and the price of it as well. Producers are not ready to buy back in, but boy, when these moisture conditions finally improve, we will see those bred cow prices increase. One that we've already seen starting to increase here are the weigh-up cows and bulls. I'd say 5 to 10 higher in just the last few weeks here. At Glendive Livestock Exchange, the slaughter cows 67 to 75, and bulls there 90 cents up to $1. Some even getting over the dollar mark at this point. And as we wrap up our report, did want to touch on the bull sales. They've come in pretty strong here at the start of 2023. That's good news for the seed stock producers. For our commercial guys, it's just another expense that's going to be higher this year. A lot of those averages 20 to 30% above last year. And some of those averages that were steady, well, that's because they sold quite a few more bulls. So some strong prices there. We are hoping the optimism carries through here in 2023. We know these supplies are tight. If the moisture will improve, we've got everything in our favor to see some improved prices and hopefully improved profitability here in 2023. Thanks so much for joining us for this month's report. Have a great month.